Hello, welcome to IGTV. This is your look at the week ahead, starting the 24th of April 2023. And in just a minute, we'll be joined by Chris Beecham, our Chief Market Analyst. But let's get you across the economic agenda, which is really heavy next week. First off, Germany on Monday with the IFO. Now, this will be interesting given big German corporates like Volkswagen have reported weakness in China, its most important single market. From the US, we have manufacturing activity data, both from Chicago and the Dallas Fed. Then on Tuesday, the industrial theme continues with figures out of the UK from the Confederation of Business Industry. Plus, we have US consumer confidence and, I believe, API crude oil inventories too. On Wednesday, the attention then turns to inflation figures out of Australia. The latest reading on German consumer confidence and trade data from across the Atlantic might be trading in points as well. And on Thursday, we see industrial profits data from what is still the factory of global manufacturing, that is China. Eurozone economic sentiment, US GDP, initial jobless claims, and pending home sales are likely to be of interest to traders as well. And we cap it off on Friday with an interest rate decision from Japan, the BOJ, likely to maintain its dovish stance there. Plus, we have GDP growth rate readings from elsewhere in Europe as well. Joining me now is Chris Beecham, IG's Chief Market Analyst. Chris, we've had those US retail sales figures, which were slightly weak, and manufacturing data as well. What does this all mean for that GDP number? I guess a weak one.
I think it could well. Of course, this is Q1's preliminary reading, so the data is incomplete, really. We could get it revised, but we are expecting growth of about 2% quarter on quarter. That's a slowdown from the last quarter of last year, which was 2.6%. So we are sort of markets are bracing themselves for a weaker number, and I think a lot of maybe stock market investors might perversely be hoping for a weaker number, because that might then, as we go back and forth endlessly on this, talk about the potential for maybe the Fed to pause rate hikes after its next meeting. So a weaker GDP number would also put that in context, I think, because everyone's alive at the moment to this potential slowdown in the US economy. Now, of course, if you look at maybe the market impact, euro dollar is perhaps the best way to look at this, certainly the most popular way to look at this amongst IG clients. You've had this impressive rally in the euro and against the dollar. A lot of that is because the ECB is talking about its hawkish credentials, whereas the Fed is sort of easing back a touch. So if you get that weaker US GDP number, you might see euro dollar then actually push on further above 110 in towards 111 or even 112 maybe over the course of time. And that takes it up to its highest level there since April of last year, really. Conversely, if you get perhaps a much more strong GDP number from the US, you can see the dollar strengthen a bit, and that might put a dent in this big uptrend we've seen in euro dollar since the October lows, and then that might perhaps lead to a catalyst for another retracement here. Although, as we would point out, really, you've got very much an uptrend here, where you've had the price rallying sharply. You've had a higher low established during the course of February and March, and the price holding up relatively well since then. So a stronger GDP number could dent this one, but overall, I think if we get a slightly weaker one, perhaps you've got a bit more upside to come for euro dollar.
Thanks very much, Chris. Chris, on the euro dollar there, we'll come back to you in a moment, because it is a huge week for corporate earnings as well, especially on the tech front, oil, and also, of course, big major banks around the world. First up, Monday, we've got Philips and Coca-Cola out with quarterly numbers. And then on Tuesday, look out for a sprinkling of numbers from Whitbread, Associated British Foods, UBS, and also Microsoft, General Motors, Alphabet, Visa, PepsiCo, Verizon. I mean, who's not reporting rather on Tuesday? McDonald's out with numbers as well. Then on Wednesday, we've got numbers out from Standard Chartered, Roche, Meta, of course, first quarter earnings there. And Boeing also out with first quarter earnings. On Thursday, this is when we get the real flood of earnings. We've got Sainsbury's, Barclays, Deutsche Bank, Amazon as well, Altria, Intel, Caterpillar, and Snap. And on Friday, it calms down a little, but we still have NatWest reporting, along with oil majors Chevron and Exxon Mobil. Chris, huge week for tech stocks. What is the best trade in terms of the FANGs?
Well, if you look at maybe the sort of group as a whole, what you've seen in tech stocks is this huge rebound in their stock prices since October, when bearishness really reached a peak. If you look at something like Meta, it's up sort of 70-80% from this October low, really. People were getting very, very bearish on the sector. And then you had this rebound. Earnings went relatively well in Q4. So far, earnings season generally has been a bit mixed, I think. But obviously, markets are hoping for perhaps a bit more of a bump from these big names. Amazon, of course, perhaps the one to watch out for after that weaker retail sales number in the US, see if that's been to pick up. And Alphabet as well, its key position as an advertising firm as well as a search engine means that this is going to be another sort of way we get to look at the US economy in a different way. So a lot's riding on that, I think, in terms of the rally in risk, which, as we've seen this past week, has taken a bit of a breather. Now, if you look at, say, the FANG index, which you can trade on the IG platform, it's a good way of sort of getting a view, at least, of what the big names in tech are doing. Here's this very impressive rally. Again, it's a bit like the euro-dollar chart we were looking at just a minute ago, namely higher highs and indeed higher lows. We're just heading towards trendline support here. So some of the exuberance we saw at the end of March, the beginning of April, has come off a touch here as we head into earnings season. Question is whether that's enough just to give investors a bit more of a positive view on the sector, maybe arguing it doesn't look as expensive as it did. Certainly, the valuations have picked up enormously since October, so a lot of the bad news that was priced in has now disappeared. The question is now really, can the outlook, I think that's the key one here, well, the numbers are almost irrelevant this time around, it's the outlook of where they see the US economy, indeed their business going over Q2 and Q3. Netflix, mixed at best. Tesla not great either. So we don't have really a great precedent heading to earnings season for these tech names, but maybe there's enough positivity coming through for the likes of Alphabet and Amazon, and maybe even the laggard of them all, Meta, to give the sector and thus the Nasdaq, and even of course the S&P and the Dow, a bit of a lift as we go into the first weeks of May.
And that's Chris there. That's right, Chris. What you mentioned about consumer sentiment and also advertising will be key for these FANG stocks. Bernstein, I can tell you, said slowing consumer spending is a challenge for digital advertisers, and that will impact some of these big tech stocks. We have to leave it there. Plenty out next week, including our special coverage of India 2023 after it surpassed China as world's most populous nation. The expectation there that this threshold will be passed middle of this year, according to the UN. And we also have Amy Kong speaking to us. She's the CIO of Barings Asset Management midweek to take a look at pharma stocks. Until then, have a great weekend. I am Angeline Ong, and this is IG.